pull up a chair and settle in, because we have quite the stack of sources in front of us today for this deep dive.
It's definitely a packed agenda. We've got articles, reports covering everything from the bleeding edge of technology, seismic shifts in the economy,
Nice.
to political drama that unfolded right in the middle of a press conference, and even a look at how people are choosing to live and, well, what they're drinking.
Today's news cycle feels less like a cycle and more like a hurricane of fascinating, sometimes surprising stuff. Our mission, like always, is to cut through all that noise, pull out the most important bits of knowledge, the insights from these sources, and figure out the so what for you, our listener.
Think of it as getting the signal without all the static.
Yeah.
We'll be digging into AI chips, battling it out, the tragic aftermath of a plane crash, ongoing debates about inflation, tax policy,
Yeah.
some really unexpected political theater, and even a glimpse into changing habits around drinks and housing.
Okay, let's unpack this stack. All right, first up, let's dive into the high-stakes world of tech. The AI chip battle is really, really heating up, especially between AMD and Nvidia. What caught your eye there?
Well, AMD just made a pretty significant announcement. They unveiled more details about their next-gen AI chips, the Instinct MI400 series. Those are shipping next year.
Okay.
And they also talked up this year's MI355X chips, which seem to be getting some, well, interesting traction.
And it sounds like they're not just talking about individual chips anymore, but like how they work together on a massive scale.
Exactly. The emphasis now is on rack-scale systems. Think AMD's Helios. The idea is the whole rack functions like one giant compute engine. They're comparing it directly to NVIDIA's Vera Rubin racks, which are also expected next year. And this approach is just crucial for hyperscale data centers, the big guys building large language models.
And here's where it gets really interesting, based on what we read. OpenAI CEO Sam Altman actually showed up with AMD's CEO Lisa Su. Now, OpenAI is a huge NVIDIA customer, right? What did Altman say?
Yeah, that was a big moment. Altman basically said OpenAI will use AMD chips. He even called it gonna be an amazing thing.
Wow.
And he mentioned that when he first saw the specs, he thought they sounded totally crazy, which, in tech, that's probably a compliment.
Right.
And crucially, the sources note OpenAI has even been giving AMD feedback on their MI400 roadmap. That shows how deep that relationship might be getting.
So a key NVIDIA customer isn't just buying AMD chips, but helping shape them. That feels like a pretty big signal. What about pricing? How's AMD playing that?
Price is definitely a focus. They're planning aggressive pricing, and they claim their MI335X will have lower operating costs, mainly because it uses less power than NVIDIA's Blackwell chips.
Okay.
AMD's specific claim, according to the sources, is that the MI355X delivers 40% more tokens, that's AI output, basically per dollar compared to Blackwell.
Tokens per dollar. Yeah, that's the kind of metric that gets CFOs listening, right?
Absolutely.
Now, NVIDIA has always had that powerful, proprietary CAD software advantage. How's AMD tackling that?
Well, AMD acknowledges NVIDIA's software lead. It's significant. But Lisa Su, their CEO, stated that the MI355X can actually outperform NVIDIA's Blackwell despite CADA. Her point, it seems, is that this proves AMD has really strong hardware, and also that open software frameworks have made tremendous progress. So maybe the software field is leveling out a bit, opening the door.
So it's kind of a hardware and open source software push against NVIDIA's whole integrated package.
Yep.
What's the bigger picture here? Market share-wise, where are we?
Right now, NVIDIA just dominates, over 90% market share. They built that not just on hardware, but on creating that whole AI software ecosystem early on with their GPUs.
Right.
AMD, historically was more busy fighting Intel on server CPUs.
Yeah.
But this AI chip market's just exploding, expected over $500 billion by 2028.
Wow.
And now both companies are committing to annual chip releases. That tells you how fierce this competition is becoming.
And who's actually, putting these AMD Instinct chips to work? Are the big names signing on?
According to AMD, yeah. 7 of the top 10 AI customers. That includes names like OpenAI, obviously Tesla, xAI, Cohere.
Okay.
The sources give specifics. Oracle's planning massive clusters, over 131,000 MI355X chips. Meta's using AMD for Llama inference and plans next-gen servers. Microsoft's using them for Copilot AI features. So, yeah, pretty significant buy-in.
That does sound like real momentum.
Yeah.
What else is AMD doing strategically to grab more market share?
They're investing pretty heavily in the whole ecosystem, not just the silicon. They've bought or invested in like 25 AI companies in the past year.
Oh, wow.
And notably acquired ZT Systems, a server maker. specifically to build those rack-scale systems we talked about. Lisa Su is stressing the need for full-stack solutions, hardware, software, the whole integrated rack.
Interesting. But despite all this activity, how's Wall Street reacting? Is AMD seen as a serious threat to Nvidia yet?
Well, AMD stock is basically flat for 2025 so far. The sources suggest this means Wall Street doesn't quite see them as a major threat to Nvidia's dominance. Not yet, anyway. Despite the moves, the market seems to be in a show-me-the-money mode.
Fascinating. Okay, speaking of tech giants and their infrastructure, Google Cloud hit some turbulence recently. What happened there?
Yeah, there were significant global outages reported for Google Cloud Platform products on Thursday.
And because so many other services rely on Google Cloud, that caused ripples, right?
Absolutely. It disrupted or even knocked down big internet services using their infrastructure. Shopify had issues, OpenAI had login problems, Cloudflare saw failures. It really just highlights how interconnected everything is. And when core infrastructure stumbles, a lot of things can break. Google Trends even spiked for Firebase, one of their developer platforms. So, developers were scrambling.
Okay, moving from the cloud to consumer finance tech, Chime just made a big splash going public. What were the details on that IPO?
Yeah, Chime, the online banking service provider, debuted on NASDAQ ticker CHYM. And the shares really jumped, closed up 37% from the IPO price, opened at $43 after pricing at $27.
Nice pop.
Yeah, initial valuation was $11.6 billion, climbed to $13.5 billion by the close.
Now that initial valuation, $11.6 billion, while it's big, it's still lower than their peak private valuation from a few years back, right?
That's right. They raised $864 million in the IPO, which is great, but yeah, the $11.6 billion starting point is way down from that $25 billion private valuation in 2021. It's kind of typical of what we've seen lately, tech IPOs adjusting from those frothier times.
Okay. So who does Chime mostly serve? What's their pitch?
Their CEO, Chris Britt, says they focus on Americans earning $100,000 or less. He feels that group is often overlooked, maybe underserved by traditional banks. Says 2/3 of their customers use Chime as their primary account. They're drawn by features that help them avoid fees, get paid early, build credit and savings.
So how do they actually make money if they're all about avoiding the fees traditional banks love? What's the model?
It's mainly interchange fees. That little fee merchants pay when you swipe your card. Britt said 72% of their revenue is payments driven.
Ah, okay.
Which the sources point out is pretty different from traditional banks relying on overdrafts or minimum balance fees. One analyst even called Chime's model unsophisticated compared to complex banking products. But it seems very effective for their target customer. They make money on volume, lots of transactions, not fees from the customer.
And their customers seem pretty engaged based on the numbers.
Oh, very. Sources say the average user does over 55 transactions a month, checks their app 4 or 5 times a day.
Wow.
Active members grew 23% in Q1 this year. So that engagement is turning into growth.
But getting all those customers must cost a fortune, right?
Certainly does. Sources noted they spent $1.4 billion on marketing just between 2022 and 2024. But they seem to keep them. High retention, over 90%, once someone sets up direct deposit. The CEO also mentioned big life events like changing jobs often trigger people to switch to Chime as their main bank.
Okay, let's shift gears now from tech and finance to the broader economy. Tariffs have been a huge topic, and we just got some new inflation data. What did that show? How does it fit in?
Right, the May consumer and producer prices, they rose just 0.1%. So on the surface, like you said, that seems pretty benign, especially given all the worry that tariffs would immediately spike inflation.
So if tariffs were announced, why haven't we seen a bigger jump in the data yet? The sources offered some reasons for that delay.
Yeah, they pointed to 3 main things. First, companies probably stockpiled imports before the April 2nd tariff announcement hit, creating a buffer.
Okay, makes sense.
Second, there's just a natural lag time. It takes a while for those higher costs to work through complex supply chains and actually show up on store shelves. And third, maybe most importantly, the sources suggest companies just don't have much pricing power right now because consumers are, tightening their belts. A Nomura economist specifically linked the small May impact to that stockpiling and lag.
But we did see prices tick up in some specific spots, areas sensitive to tariffs, correct?
That's right. There was isolated evidence. The data showed canned fruits and veggies up 1.9%, roasted coffee up 1.2%, tobacco up 1.8%. And in durable goods, major appliances jumped 4.3%, computers 1.1%. That appliance hike especially looks like previous tariff impacts, suggesting a direct link.
Okay, so there are definitely different takes on this, right? Is the low inflation a sign tariffs won't be a big deal, or is the pain just delayed? What are those views?
Absolutely, big contrast. Some experts still expect price hikes in the coming months as those lags work through and stockpiles run out. Former Treasury Secretary Yellen, for instance, predicted Trump's tariffs will push inflation up to at least 3% year over year, hitting household income. But on the other side, President Trump and his allies argue tariffs don't cause inflation. They're pointing to this low data to pressure the Fed to cut rates, basically saying, see, we told you so.
How important is the consumer in all this? If people are spending less, does that stop companies from passing on costs?
Hugely important. Consumers drive, what, 70% of the economy?
Yeah.
The sources highlight signs people are cutting back vacations, recreation. That suggests even if companies face higher tariff costs, they might struggle to make price hikes stick because shoppers are just resistant. Experts say that's a key difference from, say, the really damaging inflation after the Smoot-Hawley tariffs back in 1930.
So the Federal Reserve is probably watching this whole tariff situation like a hawk as they think about interest rates.
Very much so. The Fed is explicitly waiting to see how tariffs ultimately shake out for prices and the economy. Markets mostly expect a rate cut sometime in 2025, though maybe earlier if the economy really weakens or inflation surprises downward. The Fed also worries about second-round effects, like wages rising to cover higher costs, which fuels more inflation. Sources even mentioned Goldman Sachs recently lowered its odds of a U.S. recession, partly because the tariff drag seems smaller than expected, at least so far.
Okay, let's zoom in on specific market moves from the day these sources cover. What was the overall vibe for the big indices?
Overall, pretty positive day. S&P 500, NASDAQ, Dow all closed higher. S&P 500 is now, what, less than 2% off its record high?
And Oracle seemed to be a big reason for that lift. What was going on there?
Yeah, Oracle stock surged, like 13–14%. On track for its best day in over 3 years.
Wow.
Came after they beat earnings and gave really bullish guidance on cloud growth. They're expecting over 70% jump in cloud infrastructure revenue in FY26, driven by AI demand. Analysts were apparently super impressed, raised price targets. It was definitely a key stock pulling up tech and the whole S&P 500.
On a much more somber note, Boeing shares took a hit. What was behind that?
Yes, shares fell 5–8%. That followed the tragic crash of an Air India Dreamliner. This was actually the first fatal crash involving a Boeing 787.
Oh, really?
Yeah. Sources detail Flight 171 was taking off from Ahmedabad, India, heading to London, 242 people on board.
Right.
Tragically, nearly all were killed when it crashed into a residential area
Yeah.
just seconds after takeoff.
It's awful.
Yeah. And it just adds to Boeing's recent huge challenges, the 737 MAX scrutiny. Suppliers like Spirit AeroSystems and GE Aerospace also saw their shares dip.
We also saw a big move with GameStop.
Yeah, GameStop shares tumbled. That came after the company announced a proposed $1.75 billion convertible senior note offering.
Okay.
That suggested to some analysts, maybe investors too, that the company might be gearing up for a big purchase, possibly even something like Bitcoin. Created uncertainty, price dropped.
And there was a mention of momentum stocks kind of losing steam.
That's right. The sources noted that the stocks that really powered the market's recovery after that April tariff-induced sell-off, the ones with strong recent runs, are showing signs of stalling out now.
And just quickly on currencies, the dollar index dipped.
Yeah, the U.S. dollar index fell to a 3-year low, actually broke below the previous 2025 low from back in April. Sources mention some experts predicting more decline, maybe a breakdown, while others think a rebound is possible from here.
Okay. And finally, in this economic bucket, let's touch on U.S. firms in Ireland and the tax situation. Companies like Apple, Microsoft, Pfizer have big operations there. Why Ireland historically?
Well, historically, it started way back when Ireland opened up after economic struggles in the 80s, then joined the EU, giving access to the European market.
Right.
That also allowed strategies like the double Irish, which is gone, now letting companies park intellectual property there to slash their effective tax rates. The sources cited Apple having an effective rate under 1% in Europe back in 2014, using structures like that.
Has that changed much with the recent global tax reforms?
Ireland did change its codes. The corporate rate went up to 15% in the 2024, and the double Irish is phased out. But multinationals still use things like capital allowances for intangible assets, which can still cut operating expenses and tax bills quite a bit. Plus, there are other benefits cited educated workforce, that EU market access, just long-standing relationships.
And the U.S. administration has voiced an opinion on this.
Yes, Commerce Secretary Howard Lutnick was quoted suggesting this activity should come back stateside. said pretty directly that having all this major U.S. tech and pharma IP in Ireland got to end.
Okay, let's shift gears significantly now. Look at some political and policy developments. We saw a new IRS commissioner confirmed. Who is it, and what's the context?
The Senate confirmed Billy Long. He's a former Republican congressman picked by President Trump. Got through on a party line vote.
He faced some pushback during confirmation, didn't he? What were the concerns?
He did. Democrats questioned his loyalty to Trump, past ties to certain tax credits. Sources note Long stated during his hearings and in writing that the IRS wouldn't be politicized under him. He'd just follow the law.
And this confirmation is happening while the agency is reportedly facing pretty big cuts. What's the impact there?
Yeah, sources talk about sweeping IRS cuts linked by some to Elon Musk's past Department of Government efficiency work. Things like hiring freezes, resignation programs, reductions in force. Reports from the Treasury Inspector General, TIGTA, say these cuts will have significant impacts. Another TGTAR report found the agency lost almost a third of its revenue agents, the auditors, as of March 2025.
Losing a third of your auditors seems relevant when you think about the tax gap.
It absolutely is.
Yeah.
The gap between taxes owed and what's paid voluntarily was huge, $696 billion for tax year 2022.
Wow.
Billy Long says his goal is to modernize and streamline to collect the maximum amount owed. But doing that with way fewer auditors, that's just like a massive challenge.
And the budget proposal suggests even more cuts could be coming, making that goal tougher still.
Exactly. Trump's FY26 budget asks for a 37% cut in IRS spending. Analyses cited suggest that could really hit revenue collection. Treasury Secretary Scott Bessent says collections are a priority and hopes smarter IT and the AI boom can somehow help, despite the budget situation and the fight over that 2022 funding boost for enforcement.
And there might be new work piling onto the IRS, too.
Yes, another potential complication. If Trump's proposed big, beautiful spending bill happens, it could add administrative tasks, like requiring pre-certification for the earned income tax credit.
Right.
That could be tough for an agency facing cuts and freezes. Sources also added some context here, noting Trump recently called Fed Chair Powell a numbskull, demanded rate cuts, claiming it saves $600 billion a year. Commerce Secretary Lutnick and VP Vance also publicly criticized Powell, pushed for cuts. Powell's term ends May 2026, and reports say Trump's already looking for a replacement, with Treasury Secretary Bessent mentioned as a top contender, which, can expect to the new IRS commissioner's boss.
Okay, also on the policy front, big action on California's electric vehicle rules. What did the administration do there, and what was the stated reason?
President Trump signed 3 resolutions that basically repeal California's mandate for 80% EV sales by 2035. Also repeals their heavy-duty truck rules and low NOx standards. His stated goal, per the sources, was to rescue the U.S. auto industry.
And California, plus other states, reacted immediately, forcefully.
Oh, yeah. California and 10 other states sued right away to challenge the repeal, called it an assault on clean air and a legal playbook.
What's the legal argument they're making?
They argue Trump's repeal of the EPA waivers, those were granted under Biden, letting California set stricter standards, has no legal effect. They're citing a Government Accountability Office opinion saying Clean Air Act waivers can't be repealed using the Congressional Review Act.
Okay.
So the lawsuit targets the repeal of that 80% EV plan, the zero-emission truck rules, and the low NOx rules. It's worth noting the industry reaction cited too. The Alliance for Automotive Innovation, representing big automakers, praised Trump's move, said the EV rules were unachievable, limited choice, hurt competition, and specifically lowered the value of Tesla's emissions credits.
And there was an interesting tidbit mentioned about Elon Musk in this decision.
Yeah, Trump reportedly claimed his relationship with Musk changed after they discussed plans to nix the EV mandate. Trump's quoted saying Musk got a little bit strange afterwards. Sources give context. Musk previously led that Department of Government Efficiency thing for Trump, but they publicly fell out after Musk called a previous spending bill a disgusting abomination.
Okay, shifting again. There's been some confusion swirling around the U.S. Steel deal. What's causing that?
President Trump made some public statements about the proposed takeover of U.S. Steel by Japan's Nippon Steel. He said the U.S. will get a golden share, giving the president total control, and that Americans will own 51%.
But the sources say that contradicts the official company paperwork.
Precisely. U.S. Steel's filings say it'll become a wholly owned subsidiary of Nippon North America. So Trump's comments have created uncertainty, confusion among union members, investors about how the deal is structured, if it'll even happen as planned, even though senators separately suggested a national security deal would ensure U.S. control over the board and production anyway.
Globally, tensions seem to be rising between the U.S. and Iran. What's going on and what actions are we seeing?
Yeah, tensions are definitely up despite reports of some positive, albeit indirect, talks earlier about a nuclear deal. The most concrete step reported is the Pentagon pulling troops and non-essential staff from embassies in Baghdad, Kuwait, and Bahrain, citing potential danger.
And both sides seem to be digging in their heels, moving away from a deal, publicly at least. What are they saying?
President Trump is quoted as being less confident now about a deal, accusing Tehran of delaying. Iran, meanwhile, blames Washington, says they aren't serious, aren't respecting Iran's right to enrich uranium peacefully under the Non-Proliferation Treaty, the NPT.
And this back and forth seems to be increasing the risk of, well, actual conflict.
It does raise that specter. Trump warned about possible U.S. or Israeli airstrikes on Iranian nuclear sites if talks fail. Iran's defense minister warned of military retaliation if attacked.
What?
But many analysts, according to the sources, think a major confrontation is likely avoided for now. They see the troop moves more as like pressure tactics, choreography before the next round of talks.
What's seen as the biggest hurdle to actually getting a deal done?
The main sticking point, highlighted in the sources, is Iran's domestic uranium enrichment. Trump's red line is zero enrichment in Iran. Iran insists on its NPT right to enrich for peaceful purposes. And Iran reaching 60% purity enrichment, that's seen as a really serious step, technically close to weapons grade. That really ramps up international concern. Potential compromises discussed, like a regional enrichment consortium or mothballing facilities, some see those as unworkable ideas. Iran's also reportedly annoyed about a lack of serious talk from the U.S. on sanctions relief, which is key for their economy. And we're seeing markets react, right? Gold climbing, oil prices, jumpy signs of that heightened geopolitical risk.
Okay, finally, on the political drama front, there was quite an incident involving a U.S. senator. What happened there?
Yeah, Senator Alex Padilla of California was reportedly handcuffed and forcibly removed by police from a DHS Secretary Kristi Noem press conference in Los Angeles. Pretty dramatic.
What was Senator Padilla trying to do there? Why was he there?
Well, according to his account, he went there specifically to do congressional oversight. Wanted to ask Secretary Noem about deportation plans in California. He says he identified himself as a senator multiple times, but was still forcibly removed, pushed down, handcuffed. Wasn't arrested or detained, though.
And the Department of Homeland Security had a very different story. What did they claim?
They did. DHS blamed Padilla, called it disrespectful political theater. Said he interrupted without identifying himself or showing his security pin, claimed he lunged toward the secretary, didn't comply with commands, and that Secret Service thought he was an attacker. Although, video shared by Padilla's staff apparently showed him verbally identifying himself as a senator before things got physical.
This whole thing sparked a big political reaction, I imagine.
Oh, yeah. Outrage from Democrats, Senate Minority Leader Schumer, L.A. Mayor Bass, California Governor Newsom. They slammed the treatment of a senator, questioned how DHS treats regular people if this happens to a member of Congress. Governor Newsom drew that direct line. If they can handcuff a U.S. senator, imagine what they will do to you.
And the White House view?
Called Padilla's actions an immature theater kid stunt, done for attention. So, very different takes. Sources note Padilla did meet with Secretary Noem later for about 15 minutes and vowed to hold the administration accountable.
Okay, let's pivot now. Look at some big shifts happening in society, daily life, starting with what the sources call a suburban renting boom. What's going on there?
Yeah, this is a pretty significant trend across the U.S. Renting is just surging in suburbs, mostly because buying a home is just financially out of reach for so many people now.
Are there numbers that really show the scale of this?
Yes, the data is pretty stark. Rentership jumped 5% or more in 11 out of 20 major metro suburbs between 2018 and 2023.
Wow.
And in that same 5-year window, 15 different suburbs actually flipped to become majority renter communities.
Where are we seeing this most, geographically?
It's happening in those fast-growing Sunbelt cities, but also in the Northeast. Dallas area is a good example. Suburbs like Frisco, McKinney, Grand Prairie are gaining renters way faster than Dallas itself, adding thousands of renter households. Sources highlight it's actually harder, affordability-wise, to buy a home in those suburban Dallas counties now than in Dallas County proper.
So why now? What's pushing people to rent in the burbs?
Well, housing affordability is the core issue, nationwide, really. High mortgage rates, near 7%, just priced tons of buyers out.
Right.
So renting offers a way to get that suburban lifestyle, the space, maybe better schools without the huge upfront costs of buying, and without the ongoing burden of mortgages, insurance, taxes, maintenance.
What's the renter's perspective? Are people happy renting out there?
It sounds mixed based on the sources. Some find current suburban rents genuinely affordable compared to trying to buy there. But others are basically priced out of buying where they want to be in the suburbs, so they have to rent even farther out. That can create new problems like longer commutes, less access to jobs or community ties.
And how are landlords and developers reacting to all this demand for suburban rentals?
Well, from their side, renting gives tenants that predictable single monthly payment, which is appealing.
Yeah.
And developers are adapting. They're building different kinds of rentals in the suburbs, now multifamily complexes, even these mixed-use suburban downtowns with apartments over shops and restaurants.
Interesting.
Trying to offer that blend of urban convenience and suburban space, often more affordable than downtowns too, especially with more remote work, meaning less need for that daily commute.
What's the outlook? Is this suburban renting trend here to stay?
Experts cited think the appeal of suburbs isn't going away soon. That'll likely keep propping up prices for both buyers and renters. Remote work makes the commute less critical for many, making suburbs more viable, but also driving up living costs there because demand is high.
Okay, finally, let's talk drinks. We're seeing the rise of what the sources call a fourth category in the beverage world. What does that mean?
That's right. Flavored alcohol beverages are really carving out their own space, sort of sitting between traditional beer, wine, and spirits.
What kind of drinks fall into this fourth category?
It's pretty broad. You've got flavored malt beverages, think twisted tea, Mike's Hard Lemonade, hard seltzers like White Claw, hard ciders, and then the really fast-growing ready-to-drink products, or RTDs, things like High Noon, Cutwater, Beatbox, Buzzball.
Why is this category blowing up so fast? Why the appeal?
Sources suggest it's really hitting a chord with younger, legal drinkers. These drinks often have those flavor-forward attributes. They look and feel different from traditional stuff, and the marketing is hitting hard on social media at venues where younger crowds hang out. It gives them a brand of their own,
Yeah.
different from what maybe their parents drink.
And are the big traditional drink companies getting in on this?
Oh, absolutely. Many are jumping in, including giants like Boston Beer. They're using their expertise like brewing and distribution to launch products like their Sun Cruiser Vodka Iced Tea, kind of blurring those lines between the old categories and this new one.
What's the impact on the industry overall, on retailers?
You can see it in the sales numbers. Ready-to-drink spirits are the fastest-growing spirits. Category sales jumped 16.5% to $3.3 billion in 2024, according to the sources.
Wow.
So retailers, wholesalers, they're giving these products way more shelf space, floor space. They're diversifying their portfolios. Sources note some are even looking beyond alcohol into energy drinks, maybe even THC-infused stuff in some places, just to stay competitive and chase those consumer dollars.
Do experts think this fourth category is going to, replace beer, wine, and spirits eventually?
Not anytime soon, no.
Yeah.
Sources indicate we're a long way from that kind of shift, but it's definitely becoming a bigger piece of the whole beverage industry pie. It's where a lot of innovation and marketing money is focused right now, seeing who can capture that consumer attention.
Wow, we have really, really covered a lot of ground in this deep dive, haven't we? Pulled threads from all across that stack of sources, from that intense AI chip competition and a new kind of finance company launching, to the complex dance of tariffs and inflation, those surprising political clashes, tragic market news, and just fundamental shifts in where people live and, yeah, even what they're drinking.
It truly highlights how interconnected all this stuff is, doesn't it?
Aye.
Things that seem separate. Tariffs aimed at trade policy end up having these weird delayed effects on prices and company plans. Political decisions on environmental rules ripple through whole industries like auto.
Yeah.
New tech reshaping data centers and finance changes how businesses run, how we manage our money. And those underlying economic pressures, like housing costs, they're driving huge social changes in where people live, the lifestyles they choose.
It really makes you think about the sheer pace of change right now and all the friction points that come with it, whether it's that fight for AI dominance, the push-pull on tax policy, geopolitical static, or just the challenge of adapting rules and infrastructure to new tech and changing needs.
Indeed. And considering how fast things are moving and all the tensions we sort of touched on today, it does raise an interesting question for you, our listener, to maybe chew on.
Which is?
How might all these different pressures and trends we've discussed actually play out and interact over the next year? And what totally unexpected connections between these different areas might pop up next? That's definitely something worth mulling over.